Welcome to Short View Trading. My name is Chris Watling. I'm the CEO and Chief Market Strategist of Longview Economics and Short View Trading. And this is your morning market hit for Monday, 9th of September. It's around 10 a.m. London time. So if you want to invest in equity index futures, you want to go long or short S&P 500 futures, NASDAQ 100 futures, FTSE DAX, or other equivalent equity index futures, how should you go about that? What should you think about? What factors should you take into account? And how should you go about implementing a long or short trade on those equity index futures? That's what we're going to dig into in this video. The first thing you want to do when you're thinking about implementing a long or short trade is think about the context of the market. What's the price action? How are different asset classes behaving? How are they relating to each other? How's the equity market behaving? What about the internals of the equity market? And what about the equity market across the globe? Because if you look at last week, it was brutal. It was a brutal week for equity markets globally. US equity markets were down across the board, led by tech and led specifically within tech by the Philly SOX, which was down around 12% last week alone. But it was also weakness was there across the global landscape. In Europe, all equity markets were down, led by Holland, the Dutch market, which of course has got a big semiconductor stock in it. ASML, very weak last week. The Dutch leading the weak Dutch market to be one of the worst performing indices in Europe. And then also in Asia, similar story. Japan very weak, down 6%. Taiwan struggling as well. TSMC, another semiconductor stock, has a big weighting in that equity market. So you've got to start by contextualizing the market. And of course, within the Philly SOX, there's a whole bunch of semiconductor stocks. Some of them, as I said, one in Holland, one listed in Taiwan, and the biggest one, the mother of them all, listed in the States. And of course, that is Nvidia. And in that respect, it's pretty interesting to note that Nvidia, the obsession of market traders this year, has been behaving very interestingly to the downside since its highs in June. This stock's had a tremendous run up until June, up way over 100% year to date in the first half of the year, but down markedly since then. And as you can see from the chart, it's down around 27% from its June highs, which on an annualized basis is over 100%. And that's a very rapid rate of decline. So it's a good illustration of how you need to understand what matters in the market at any one point in time. Because Nvidia has been this year's obsession, but 2 years ago it wasn't relevant. It wasn't in the market narrative. It wasn't a main focus of market participants. This year it's critical. And as we show you on this chart, this is an overextended chart for Nvidia. It gave a very good sell signal in June this year, and it's given very good sell signals over the last year or two, which showing when Nvidia's become very overextended. And of course, when a stock's overextended, everyone's also really positive about it. The narrative's strong. Everyone's talking about it. It's rising at speed. But that's actually at its most dangerous point, and that's typically when it becomes overextended. So in June we had that sell signal. Now we see that actually Nvidia is starting to look overextended to the downside. In other words, we've just begun to generate a buy signal on this chart. This is something we'll be watching closely over the next week or two in our daily risk appetite gauge. So when you think about the context of the market as a whole, Nvidia matters at the moment. As I say, it doesn't normally matter in the history of the S&P 500, but it's critical as we stand today, as is the Philly SOX. And of course, Nvidia is the biggest weighting in the Philly SOX, along with the likes of AMD, TSMC over in Taiwan, as I mentioned, ASML in Holland, and all these stocks, and you start to see the interconnectedness of the global stock market. So where are we at this point? After a brutal week last week, with a lot of indices beaten up heavily to the downside, how are we looking at this juncture when we're thinking about that 1 to 2 week swing trader time frame? Well, the first thing we do is we start thinking about our short-term market timing models. These are the first piece of the puzzle for us as we're looking out on that 1 to 2 week time frame. Are the models mostly on buy, or are they mostly on sell, or somewhere in between? And of course, going back a couple of weeks, back into late August, we had a whole bunch of sell signals. And in fact, we went short the NASDAQ 100 futures on the 23rd of August on the back of the fact that, one, we were worried about tech and we were expecting a wave 3. Look at some of the prior videos we put out around that time. Secondly, all our short-term market timing models were pretty much on sell. And then thirdly, we had bearish key day reversals in the key parts of the global tech stock market. So in other words, the Nasdaq 100 key day reversal, as you can see on this chart, on the 22nd of August, and similarly in the Philly SOX, the third bearish key day reversal in a matter of months. So all of that added up and gave us the ammunition and the rationale to go short Nasdaq 100 futures, which we then did. But the question is now, with models moving on to buy, what's the next step? And indeed, that's what we address in our daily risk appetite gauge each and every day, which is published around 9 a.m. London time. We look at across our range of short-term market timing models, and models like this technical scoring system on the Nasdaq 100 and the Philly SOX, which I'm putting up in front of you now, which is back on buy, having been on sell not too many weeks ago and been a part of that signal to go short back in late August, as we did in the Nasdaq 100 futures. So that's the sort of model we look at. We look at our risk appetite scoring system. Also just about to go to buy. This is like a fear and greed index. When it's toppy, it's telling you everyone's greedy, risk appetite's high across the globe, people are getting involved in being on the long side of risk assets. And when it's at low levels on buy, it's telling you people are starting to get fearful. So that's part of it. We look at volatility, we look at put to call ratios, we look across a whole range of short-term market timing models. And we take that message and add to that the context of the market, the price action across the key global assets. How are key global assets trading? Are they holding at key levels or breaking key levels? And with all that information, we come up with a recommendation on that 1 to 2 week time frame, that swing trader time frame, to go either long or short an equity index future. Typically the S&P 500 futures, occasionally the Nasdaq, and sometimes other futures across the globe. So if you're interested in a free trial, simply click on the link below. We'll send you the daily risk appetite gauge for a bunch of weeks for free. Or if you're a subscriber, it'll be in your inbox around 8:30 a.m., 9 a.m. London time, every business trading session. So other than price action and short-term market timing models, what else are we watching in this market this week? Well, there's a ton of key events and key macro data coming out over the course of this week. In terms of key events, there's two in particular we're focused on. Firstly, the ECB on Thursday. We're expecting a rate cut. We've got a press conference from Lagarde after that. That'll be watched closely. The tone, what does she say, etc. and so on. And then over and above that, the US presidential debate, the first one Tuesday, late on US time. That'll be watched closely. Who's the winner? What does it do to the polls? How will it influence how traders and investors are thinking about the outcome of the election and therefore looking to price it into equity markets? And then in terms of macro data, lots going on. There's a big focus in China on total social financing. This is the monthly lending data. This is important for growth. It tells you how much they're trying to push credit out the door and encourage growth. And then on top of that, there's a lot of data out of the States, including the main focus, I think, in terms of US macro data, US inflation, CPI, Wednesday, 1:30 p.m. UK time, 8:30 a.m. Eastern Standard Time. This will be watched very closely. It's critical, especially if it comes down faster than people expect. It'll be interesting to see what it does to interest rate expectations and whether or not it moves the dial on what we're going to get out of the Fed next week. Over and above that, you've got some Michigan sentiment, NFIB small business survey, some interesting data out of the UK, and one or two other bits and pieces. So that's it from us. That's your morning market hit for Monday, 9th of September. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button and share them on social media and like. We'd be grateful for that. Or follow us on LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe, trade well.